with more dollars and the same, the demand for those apples is going to grow in dollar terms because there's more dollars chasing them. So it's simple. But the debt spiral, that problem really has to do with our government spending. People get all over the Treasury about how much debt there is and how the Treasury is putting us in a terrible position. But the reality is, it's really Congress. It's the legislatures who are deciding how much we spend each year. And right now, if you look at everything right now, our GDP is just under $29 trillion, which means that's the gross domestic product. That's what we, as all of the citizens of the United States and the companies, are generating in dollar terms and productivity. And then tax revenues come off of that. And our tax revenues right now, according to the CBO, which is the Congressional Budget Office, and they every year put out the budget and show exactly what they're projecting, what they expect to make each year, and in total revenues and total spending, and what their budget is around that. And they put this out every year. That we're not. So what we're going to do is we're just going to issue more debt, borrow more money, use that debt that we just issued to pay off past debt that's maturing, and borrow to pay off more programs that we, just to enable all that spending. And that's what's happening every single year. And that's why our deficit is not shrinking and our debt is just growing and growing and growing. It's going to continue like this until something changes. And that is something that is that would be something catastrophic. And so we can talk through that. But right now, that's where the situation is, and there's no stopping it. So, people ask, Brandon, like, okay, so what's the solution? That's great. You have a problem. So what's the solution? What do you propose? Well, you've got three basic solutions. You could have austerity, which we saw back in the great financial crisis. Greece was forced into austerity by the EU, the ECB, and the EU heading into a recession. The jobs numbers we had a high unemployment number. That means that unemployment rate it's starting to accelerate. And if you look back in history, unemployment does not start going up and then suddenly come back down. It just doesn't happen. So once it starts accelerating, that's it. It starts really accelerating through into a recession. So that's something that keeping an eye on. Spending numbers, credit numbers, personal credit card defaults, they're all rising. And then this week, tomorrow, we're going to get the Bureau of Labor Services, the BLS, is going to revise their employment numbers that they've been giving us. And it sounds like they're going to revise them anywhere from 300,000 to 1 million jobs lower for this last year. That's significant. That means that they've overestimated the job market. The job market is slowing faster than they expected. If it's not a Goldilocks soft landing and the Fed isn't able to land this jetliner on that piano wire, then we're in for some sort of expansion that's rapid. But the flip side, the other side of that is if we do somehow engineer this soft landing with all this fiscal spending, another thing we could talk about, you will just continue to have expansion of the M2. We're seeing it now. That's just started to expand again. And so that means that we're injecting liquidity back into the markets. It's not contractionary. We're actually injecting liquidity back into the markets, which is inflation. That's been a problem, and that is going to continue to be a problem. But and then some companies that rely on high or floating rate interest on their debt, those companies have been struggling, and you're seeing layoffs in certain companies, especially in tech companies that are having to borrow, and they can't keep up. And then on the flip side, you've got this tremendous growth and just it's actually been quite resilient on the sector and on the services sector side. Well, why is that? Well, remember, you've got these houses. The housing market has exploded in value, right? So you've got all these the majority of either one of them could blow up into a full out war for us. And so we're concerned about that. And so you could see gold is catching some interest here, partly because of that. But I think partly it's also just to get ahead of this inflationary environment, because the reality is that if we do have a market sell off, the Fed doesn't really care about the stock market in and of itself. It only cares about the stock market in terms of, would a stock market crash, would that precipitate a recession? Would it impact the bond market negatively, the treasury market in particular? Would it impact the debt on the other side, because they would come in and stabilize the markets as fast as they can? So that's what you're seeing in gold is, you're seeing that anticipation of that regardless. So even if gold sells back down to 2200, 2300, gold investors don't care. They're like, it doesn't matter. Long term, this thing is going to double or more.
So yeah, I mean, it seems like it's, the gold is always kind of the signal, right? I mean, Peter Schiff obviously famously, screams that from the mountaintops. But with Bitcoin being liquid, you mentioned that would be the first thing that people sell off. Now, obviously this crazy psychopath hodlers out there are like, foaming at the mouth hearing that. But why?
Walk in and say, I want my money, and they say no, you can't have it. Or you see them asking to transfer the money to an exchange or someplace else, and they say, no, we're not going to transfer it there. We're not going to transfer your money to Coinbase or wherever. You've seen this happen. And so people got nervous, and Bitcoin became an escape boat, became a lifeboat for people. But it was short-lived. The Fed and the Treasury stepped in with another acronym, this time the BTFP, and they saved the banks, their bank term funding program. And so that flight to non-fiat based safety was short-lived. Whether that happens again, it pleases me to hear Trump and Vivek and RFK Jr. talking about it. That is a positive. Senator Lummis has been tremendous. She's been awesome champion for Bitcoin. Senator out of Wyoming. However, I mean, there's still a lot of political rhetoric, and I guess the most positive thing out of it is that it shows that they aren't opposed to Bitcoin like the current administration is. So that's the positive. What happens out of that, I don't know. Does Bitcoin need them to be positive and enact positive legislation around it? No, it doesn't. Would it accelerate adoption? Be in the right position to win the championship? Who you need to draft, how you need to do it, where you need to spend your money, where you need to save your money, why the math works, why the trajectory works, and how the statistics come into play. And if you do that, you're going to be okay.
There we go. I love it. Well, James, thanks so much. You've been very generous with your time. Why don't you tell people what you got going on and where they can find out more about you?
Yeah, so I am, that I'm the co-managing partner of the Bitcoin Opportunity Fund. I manage that with David Foley, and it's closed right now, but we invest in the Bitcoin ecosystem. It's all Bitcoin opportunities. But we might have another fund, and we'll likely have another fund in the near future. So if anybody who's accredited, you have interest, you can reach